Welcome to Second Take, the show that focuses on the issues behind the news. Chile's state-owned mining company Codelco's offer for Anglo American Sur's well-developed copper assets allowed Chile to gain 32 billion rand for free, an amount that adds up to more than the cost of South Africa's hosting of the 2010 Soccer World Cup. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Who do you believe is actually paying for the investment for Anglo American Sur, and what do you think this means for the deal?
You know, it's really working men and women who contribute to pension and provident funds and insurance contributions that have become the capital of the world. This is the capital that's invested. It's invested to try and make sure that people beat inflation, that when they come to retire, they have some sort of nest egg. And it was interesting in Johannesburg, I think it was last year, when Platinum were raising capital from a Dutch pension fund. Present at the presentation was a diplomat from Holland. I think he was the ambassador. And he said, look guys, you better do well with this money, because that's where that's my pension money. You know, so he himself was indicating how widespread this whole pension capitalism is. It goes around the globe, and this is the money that's used to create growth and wealth in the economy and jobs. So I think people need to realize that it's not some big rich guy that you're hurting, but it's the small people, it's the little people, the ordinary working people who entrust fund managers, with funds. The fund managers have trust in these companies. And, it's not fair to have this sort of shock. I think there needs to be some sort of recognition of the fact that, suddenly shortchanging Anglo American Codelco deciding that they can get this because of some old agreement they have at a $4.03 discount minimum. Now, this is a forced sale because Anglo wouldn't in the normal circumstances have wanted to sell this. I mean, they've just been building up their copper assets. So, the shareholders are being denied that revenue stream from copper going into the future. And along comes Codelco and forces the sale, but then doesn't want to pay what should be paid. And it amounts to, like 32 billion rand. I mean, we staged our World Cup here in 2010. We put up stadiums and the cost of hosting that World Cup, to which Chile came and played here, was less than what Codelco is pillaging. So it is something that people need to wake up to. I don't think that the world should be just allowing this to happen, because we know that this is the way funding takes place.
Now, you believe that Codelco and the Chilean government are failing to recognize how capital is raised in today's world. Can you elaborate?
Yes, I mean, for the last half century, some people say, the biggest source of accumulated funds has been pension capital. I mean, people have been writing doctorates on it, and people have been studying this. And recently, because of the nationalization threat in South Africa, we've been made very conscious of this. That, those funds are largely made up of folks capital, the people's capital, the ordinary workers' capital. This is what is put at risk. And obviously, we don't want any strange shenanigans like we're seeing now with Codelco to be seen as okay. I think there needs to be a howl of protest. And I wish there would be more of one, because there's more of reporting on the fact that, Anglo have tried to defend themselves. So they've sold off 24.5 billion, but in 24.5% of their Anglo American Sur assets, their copper assets in Chile. But one thing that defensive sale has done is it's proved the value of this as being like $22 billion. Now that value is not acknowledged in the price which Codelco, which is state-owned and which is being backed by the government of Chile, is just foisting on Anglo American and therefore its shareholders.
Now, former NUM President Dr. James Moklatsi made the point that pension and provident funds of workers shouldn't be messed with. And yet this is exactly what Chile plans to do. What do you think of that?
Exactly. So, that was an important point made by Dr. James Moklatsi. He's a former president of the National Union of Mine Workers in South Africa. They represent 300,000 members. Their members do a hard job. I mean, they go into very vulnerable areas, and they a percentage of their wages, goes into a nest egg for them when they retire. And he was making the point against the background of the nationalisation debate in South Africa, and saying, look, lay off these funds. I mean, he was really addressing his rancor to the African National Congress Youth League, and saying, nothing about us without us. Don't try and interfere with the industry, because you are interfering with our retirement funds and the retirement funds of civil servants. Because if you make utterances that cause the stock exchange in Johannesburg to collapse, you will cause our life savings to collapse. That is not fair. So, you must be careful about your rhetoric. And I think in this case, his words can be applied to Codelco. They should be careful about messing with people's pension, retirement funds and their nest eggs. They should be very careful, and they're not showing that care.
How can people become involved in being against what's happening in Chile then?
I think that it'll just have to be a situation of the penny dropping at some stage. That, the modern world, this is how capital formation takes place. It's overwhelmingly from pension, provident funds, insurance funds. These are really trust monies, I mean, they're not to be, you don't go fast and loose with this sort of money. And we see Codelco going fast and loose. They're playing fast and loose with this. Now they're wanting to take it to court. They've gone along to, their lawyers. The lawyers have now stopped Anglo American from selling any more shares in Anglo American Sur. So they've got those 24.5% sold off to Mitsui. And the price paid shows that the value of that company is far greater than what Codelco was acknowledging. And now they go along to the courts and stop them from selling anymore on the basis that they are still entitled to 49%. So what they're really saying is they're going to take 49% of this company, come what may. That means that Anglo American, which has invested $6.5 billion, in this country, they're employing more than 10,000 people. And jobs are very scarce in the world today, and I can guarantee you those are quality jobs, knowing Anglo American. And those 10,000 people probably affect the lives of, about 50,000 people when you've got the indirect benefit. When they had the earthquake, one of the early aids came from Anglo American. They rushed out to try and assist the company in its hour of need. Anglo also tries to eradicate shanty towns there. They've been a good corporate citizen. In fact, they've been proud of their investment in Chile. That they should be treated so shabbily, I think, is cause for self-reflection. I think Chileans should start saying to themselves, is this the way you treat foreign direct investors? South Africa, we also need to treat our foreign direct investors well. In fact, at the moment, we would really welcome foreign direct investment. Here's an Anglo American, a very good corporate citizen of Chile, wanting to invest more, keen on increasing its copper, now being forced to sell against their wishes, being treated shabbily, hauled through the courts. And I think that most of the time, the analysis that's done just looks at the hard facts and says, look, Anglo should have exercised due diligence. This deal goes back to 1978. it's a shabby deal. You know, it's not one. It's one that they should just crumple up into a ball of paper and throw into the waste paper basket, because it's not worth the paper it's written on. This is a shabby little deal that looks narrowly instead of them looking broadly, because they also need foreign investment like every other company.
Yes.
And if they treat, you know, their foreign investors as shabbily as this, perhaps they don't deserve the foreign investment that they're getting. So I'd like them to relook at themselves. You know, if there's politicians there, they should say, let's go for the bigger picture. Let's not look like pillagers, you know, cheap little pillagers, like shoplifters, you know, and let's do the right thing. So hopefully, you know, that groundswell of opinion will build up, but it doesn't seem to be gathering momentum at the moment.
Now, going back to South Africa's nationalisation debate, do you think this deal could have any impact on that?
I think so. It will sober us up and say, look, this is the way that the big capital formation takes place in the world today, is through pension capitalism. That's what's underpinning. And then it means people's earnings, people's savings. And we need to make sure that those people are not hurt, because they're doing us a good turn by coming into our country and enabling things to happen that wouldn't happen. They're capitalizing these things, so we need to treat them with great respect. And I would like to say to the ANC Youth League, they should be treating our foreign directors with great respect, foreign direct investors, because they're worth a fortune to us. They are trusting us with this money. It's so valuable.
Yes.
And we should make sure that we do not utter the N-word without really looking deeply at who it's going to hurt. It's going to hurt a lot of ordinary working men and women of the world.
Well, thank you very much, Martin, for your insight.
It's a great pleasure, Shannon.
That's the show for today. Join us again next time for more news and insight into what's happening in the mining world.